this is John Cato, 30-minute trading and FX Profit Lab. We're looking at a chart of the Aussie dollar, AUDUSD. It's the 15-minute chart. This is happening this morning. What I'm looking here is the volumes. The volumes down here are all low. This is the first volume candle we've got. Not only that, we're looking at the way in which the price has been moving sideways. This indicator below here, the bull bear butterfly, tells me what trend I'm in. So essentially, if I'm below the red line, I'm going down, short. If I'm above the green line, I'm going up, long. If I'm in the middle, I'm not interested in any trade at all. The next line I've got here is another specialized indicator, the litmus test, which tells me if it's up at the top, we're going long. If it's down in the middle, we're not going to do anything. If it's down at the bottom, we're looking for short trades. So that would have been over here. We'd be looking for short trades going down. Then MTrader 3 is an indicator which gives me an alert, which is a late alert into a possible trade. So there you can see that was a trade potential there and another trade potential there. The rules of the game are you don't take a trade unless it breaks out above the top of the candle, which has the thrust. These are momentum indicators. They also give audible alerts to a trade. I like to trade off the gold line. The gold line gives us the gold effectively. You can see here that potentially, even with low volume, potentially we'd have a trade there going long as the gold. But I wouldn't have taken that for two reasons. One, it was overnight, I'd be fast asleep. And second, because it's in the middle here and it's called a butterfly trade, and I want to stay out of butterfly trades. So I'm looking at this line here. There's a gold. It's a bit early in the morning. The volume hasn't yet picked up yet. But now we've got a gold going up. We get an audible trade alert. Let me bring you the trade alert up and I can show you what that looks like. The trade alert here is, it kicked off at 7:14:52 seconds saying that we want to buy the Aussie dollar with 1.7 lots, that's 17 minis, at 0.7269 with a stop at 0.7263, target 1, 727, target 2, 7273, target 3, 7275, target 4, 7279. These are calculated dependent on the exact price action that's happening in real time, and it comes up with the alerts, audible alerts on your screen, and it flags it up with the visible alert telling you exactly what you should be looking at. BBB is saying it's 14.75, that's as bullish as it can get. Litmus is 2, that's as bullish it can get. So we're pretty much good to go. So that's a trade that we would be interested in taking. Now let's have a look and see what actually happened. We've got the trade alert here on this candle. Our stop is 7263, so that's about there. So let's just put a line on the chart somewhere around there. 7263, that's roughly there. Let's see if I can give it 0.7263. There you are. Okay, so that's the stop price, and our target price is going to be on this one 7275. So we're looking for 7275 as being our target, which is up here someplace. So what happened when it actually proceeded with that trade? You can see that we got into the trade. This price, the stop price, never got challenged. We got into the trade as it took out through the top here, there, which is our entry price. And our entry price, it says down there, is 7269. So we got in 7269. There we are, about there. We got into the trade 7269, 7275, which is that's 7278. So we hit target 3. It looks like we probably hit target 4 as well. Anyway, now if you hit target 3, typically you're making something like 1.5 times what you risk, sometimes 2 times what you risk. Again, it all depends on the price action. The algorithm that tells you how much to trade limits your risk to 0.9% on each given trade, and you can change that to whatever you want. You can reduce it or increase it, but I recommend being prudent and very cautious. However, this one trade on this morning would have given you that number of pips there, which was 6 pips altogether. It's not very much on this particular trade, So we got 6 pips out of that trade, closed out around there. We could have got a little bit more out of it. We're trading with 1.7 lots, which is roughly equivalent to $17 or £17 a point. So 6 times 17 is how much money you would make on this particular trade. You would have been in the trade there, you've been out of the trade again there. So out of the trade on this candle here, 8.15. So it's around 8.15, 8.25. So within 1 hour, you'd have made 17 times 6, and you can work that out. I can probably work that out. It's over £100 anyway, or over $100. With a trade that's really relatively safe. Everything's all set up and indicated for you. What happened after that, of course, is interesting too, because later on we get a pullback, which is what we expected. We banked our money there, remember. And then we get this setup over here. And if you look at this setup over here, you can see all of these indicators here beginning to join up to go up again. And there we are. That's the one you would have got the alert in. In fact, I did get the alert in on that one off MTrader 3 saying going long. And there you are, and bank the profits on that one as well. We've hit T3 again. So another 1.5% profits altogether just off this one particular asset with 2 trades just sitting there waiting for the alert to come out. We have made potentially 3.5% return on capital. You don't need to trade anything else. That's it. That would do you for the week. One trade in the week, 3%, or 2 trades rather, 2 trades like that in the week, giving you about 3%, is going to work out at over 200% in a year. That's absolutely massive. That's why I have confidence in this trading system and the way in which these trades go. Hope that was useful for you, and have fun trading.